From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 21st, 2018. Today we're going to take a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Before I begin looking at the chart, it's important for me to recognize the news calendar for the day today. At 2 p.m. Eastern U.S. time, we have FOMC interest rate news popping up. Definitely, of course, could affect the U.S. dollar and this currency pair specifically. So you want to make note of that at 2 p.m. Eastern U.S. time. And then not too far after that, at 4 p.m. Eastern U.S. time, we get interest rate news out of New Zealand. So two interest rate news, pieces of news that can affect this currency pair specifically could cause some extreme volatility. So you want to make note of that and use appropriate risk strategies as or if you decide to take trades here on the New Zealand dollar. Anyway, let's dive right into the chart. We can see that overall this currency pair has been bouncing around in quite a wide range. The black box that you see here on the chart, really since January, we've been bouncing around in here. The blue box is specifically at the bottom of that larger black box. The green shaded area right around the 0.7200 level has found support. The blue boxes see support, bounce up, and support over the past couple of days again. So significant area, 7200, 7190, highlighted in green. It happens to also be the 382 Fibonacci retracement level of the lowest low on the chart to the highest high. Measuring that with Fibonacci puts the 382 at 0.7186 just underneath that green shaded area. So we know that that's a significant level Fibonacci wise, historical support. We've even seen resistance here. If you look at the three circles on the left hand side, we can see historical price action of support and resistance, specifically resistance at the two black circles that you see on the left hand side. And the next support, of course, highlighted by those circles on the left, is the yellow shaded area closer to the 7140 level. Happens to be also the 100 period simple moving average sitting there at that yellow zone. So for the day today, it's not too hard to see. As long as it's under that green zone, we have this expectation that we have a breakout of support and the fact that we're looking for it to go lower. Breakout of Fibonacci, and we're looking for it to go lower towards the yellow shaded area. So we want the best opportunity with lowest risk and highest reward. If we're going to go short, if we're going to sell it, we want the lowest amount of risk. How do we do that? Well, let's go ahead and zoom in a couple of times. Well, we're seeing that breakout underneath the green zone. What's the risk? Well, I would say at least at minimum your risk, your stop loss, would be that it turns around, goes back above the green shaded area. So I would say that if you're looking for a stop loss, it's above the green zone, which is of course historical support becoming now resistance. So that becomes your potential stop loss, potential risk, potential area that if the market breaks back above, you just don't want it to do that. You want to be out of any shorts that you're at. So let's take a look. Potential loss is what I was thinking, above the 72.05 level if it gets back above there. So we don't want it to do that. So the best thing to do, the way to find the lowest risk, is allow the market to drift back to that green zone, because it would make that stop loss smaller if it makes it back up to the green zone before going back down. So what I'm looking for today is sort of a check back into the green zone, and then the next fall lower. Now, of course, all that could hinge on interest rate news. You know, if we get a change of interest rates out of the U.S. as it is expected, the question is that priced in already? Will we see the U.S. dollar appreciate, which of course sends this currency pair lower? If the FOMC surprises everybody, doesn't change, that could send this soaring higher as the market sells off U.S. dollars and sends this currency pair higher. And the same thing with New Zealand. Of course, we would expect a good positive statement for New Zealand, sending this higher again. Any negative momentum on New Zealand interest rates sends this lower. So we know where our areas of decision are. If we're going to sell, the green zone closest possible, 71.90, becomes our opportunity to go short, lowest risk, because our stop loss becomes smaller at that point. Selling closer to the yellow zone, of course, it decreases our potential profit the closer it gets to the yellow zone. And really, I think there's no reason to buy this currency pair today. It only looks short, and the best opportunity to go short would be closest possible to 7,200 for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.